tea with Travis, iced green tea. I needed a little refreshing drink today. Today being June 24th, Wednesday, and being so close to 4th of July, I guess the best analogy I can think of for the Fed announcement today when they came out of their meeting was a dud. I think bond traders and stock traders were expecting much more to play off of. But speaking of 4th of July, am I the only one that feels like it was just a year or just a couple of weeks ago that we were lighting off fireworks in our driveway and not a year ago? This last year has just flown by incredibly for me. It seems like a lot of people I've talked to felt the same way. I just thought I'd point that out. But with the announcement today, the Fed came out, and right now bonds are at flat. They're zero. I mean, literally not up or down. They're zero. And the Dow was down about 23 the last I checked a few minutes ago. So really slow trading day. I think everybody was expecting a shock and awe statement from the Fed to come out and either announce interest rate increase to the Fed funds rate here in the next coming months or end of the year. They didn't even come to that conclusion or any kind of hinting of that. And we also thought that maybe they'd come out and talk about accelerating the purchases of mortgage-backed securities to get interest rates back down, and they didn't do that. So really, I think the bond and stock traders are scratching their head when this announcement came out. And I'll quote right from the Fed policy statement: the pace of the economic contraction is slowing, and conditions in financial markets have generally improved in recent months. And when they say a statement like that, typically what would happen is stocks would go on a nice run, and money would be pulled out of bonds and into stocks. And the reason this happens is because anytime there's positive economic news, it builds confidence in not only traders, but just people like us, the consumer, to invest back into stocks because things are improving in the economy. Things are improving in the economy, stocks do well. When things are not doing well in the economy and there's bad economic reports, typically the thought process is the stocks will not do well, they'll continue to plummet, and money goes into safety, the flight to safety, which is into bonds and treasury notes and mortgage-backed securities. And so that in itself, that statement should have made stocks going to rally, make mortgage rates worsen. But following that exact sentence came the next sentence was inflation is to remain subdued for some time. And inflation is the big enemy of mortgage-backed securities or any long-term mortgage-backed or any long-term money. Anytime you have inflationary pressures pushing against anything that's guaranteed over time, obviously inflation erodes at that. So between those two statements, they basically cancel each other out, and we're back to zero on both stocks and bonds. Prior to the Fed announcement at 11:15 here our time here on the West Coast, there was the 5-year Treasury note auction. Yesterday was the 2-year Treasury note auction. That was $41 billion worth of Treasury notes. Today was $37 billion. Again, the concern was how is the economy and the global economy going to absorb all these Treasury notes that we're printing? Well, apparently they're doing it somehow because Rick Santelli, the big bond guru from CNBC, if you ever watched CNBC, gave it an A- rating, which is a great rating for any sort of auction with bonds especially. So with that being said, that should have caused some improvement in bond pricing too, but it didn't. So there's some strong statements, but they're almost counteracting each other. So it's interesting to see how that all plays out. With all these announcements and Fed policy statement, it caused the dollar to strengthen against other global currencies, and so the dollar is strengthened today, as well as oil prices have come down. And again, remember, oil prices are based on U.S. currency, and so when there's a big fluctuation in the value of the dollar, it's not necessarily oil production is more expensive or there's a lack of oil. It fluctuates with the price of the dollar. So just a little tidbit there for you in case you forgot or haven't tuned in for a while. We look forward to serving you. We hope you tune in again, and go to neliton.com for posts and updates and blogs at neliton.com. Other than that, we look forward to serving you. Have a great day and be blessed.